The crypto world stands at the edge of a major transformation. The Genius Act is poised to reshape the landscape for stablecoins entirely. What that actually means for you and your stablecoins, and of course the crypto prices on the Bitcoin and altcoin front. Much more about that right after the intro. Stay tuned. Hello and welcome to yet another video from Bloomberg Capital. My name is Patrick and I have my colleague Henrik sitting next to me. Today we're going to be discussing the Genius Act that was currently put into law, where we will be seeing further new regulation come in for stablecoin markets and what it actually means for us. Could we get a small summary on what the Genius Act actually does and what it actually means for us as crypto investors, Henrik?
Well, the stated goal of the Genius Act is to entice a lot of private entities, mainly American companies, and with that American fintech companies, to mint their own stablecoins. Minting basically meaning to create a new cryptocurrency that can be used on the blockchain. Now, when it comes to stablecoins, this means that it is a cryptocurrency with a nominal value of exactly $1, meaning that the stablecoin is directly linked to the value of the American dollar. And it does this by trying to legitimize stablecoins and giving a legal framework for companies to create their own. The first way in which this is done is requiring 100% backing for stablecoin minters, meaning that a company that wants to give out a new stablecoin has to, on the back end, hold 100% of the value of given out stablecoins in cash or cash equivalents. Now, this is either direct cash, as I already stated, in the form of American dollars, or on the other hand, in the form of US treasuries, with a maturity of up to 93 days. So very short-term treasuries. Beyond that, there will be a large expansion of government oversight over these stablecoin providers. So on one hand, for large stablecoin providers, meaning over an evaluation of $10 billion, it will be handled by the federal government, namely by the SEC, and in the case of smaller stablecoin providers, so with an evaluation of under $10 billion, it will be handled on the state level. All in all, the goal is to increase transparency, at least allegedly, and give a very clear legal framework for companies to create their own stablecoins. Also, with the accompanying acts like the Clarity Act, it will enable the prosecution of fraud in the crypto space, which has become somewhat prevalent and has been very hard to do so far.
Thanks, Henrik, for the summary, but it also does introduce new risks to the system. For instance, with that act, we can get essentially more companies that can issue more debt, because this is what this is aimed for. Because if I can earn like 8 or 9% by simply staking US dollars in Tether, for instance, I have a higher incentive to simply take loans and back them with stablecoins to lend them out to crypto investors, for instance. Additionally, what happens if there is a liquidity event? What happens if there is high volatility on the market and lots of people are currently looking to redeem their stablecoins for actual dollars or different currencies because it's aimed to be used around the world? What happens in such events? Since it's not only one entity but many, most of the liquidity is being scattered around smaller companies, and therefore the nominal value might be increasing in terms of liquidity. However, there are more and more companies that hold less and less cash. So if a large entity of people comes in and wants to redeem their stablecoins for fiat currency, there might not be much liquidity there, since with backing these things with government bonds, you might need a lot more time to get that cash at hand to be able to give it out to your users. So there is a possibility that we do increase the risk of insolvency for these companies, and therefore lots of people could actually lose their money if these companies go bust. However, they're also innovating now, not only talking about negative stuff. This will enable many users to send cash wherever they want, whenever they want, without any permission, and do it in an instant. This is a new form of cash transfer that is actually an advancement of our current monetary system, and it will have lots of benefits across borders because there are simply no borders there anymore. However, this also puts us in a very different political environment. This kind of strengthens the American strength and also sovereignty over a government-backed cryptocurrency. Do you want to highlight a little bit more in that dimension, Henrik?
Well, yes, actually. As already stated in the beginning, we had the stated reason of the Genius Act being to entice American companies into creating new stablecoins. But what is the actual deeper motivation behind this? Well, there are actually two things that we could identify. Now, on the one hand, we have the current American debt situation, which is slowly getting out of hand, with the American debt pile rising more and more. And now, with most recently, the Big Beautiful Bill passing, this should accelerate even more, with more and more American debt coming into the market. Now, the US already has a problem where not enough people actually want to buy US treasuries to take on the growing debt. But now with this new legislation, we see that companies have the decision to basically hold their reserves in either American dollars or treasuries, with most companies obviously choosing a large position in US treasuries, as they could realize some profits from those in opposition to just holding cash. So we should see a lot of crypto money coming in to buy US treasuries, basically propping up the US debt and allowing them to borrow more money. Now, on the other hand, we could see this act furthering the dominant position of the US, especially in the crypto market, because already the dollar is quite important in the crypto market, with the most used stablecoin being USDT, so a stablecoin that is already linked to the dollar. But now with more and more stablecoins linked to the dollar coming into the market, we should see this become even more the case, so that the dollar and the crypto market become more and more interlinked, therefore strengthening the American grip on the crypto market and the dominance within that, even though crypto is traded all over the world. So we see that with the Genius Act, the Americans can definitely pull out some big benefits for them. And with that, I hope you enjoyed the video. I wish you a good week, and until next time, here at Bloomberg Capital.